Mike here, head trader at True Trading Group, July 31st, Fed Day. Nice day today, guys. We caught a big move on some SPY put options after the Fed rate cut decision. It was the whole premise of the whole basis behind my whole day today was coming into the day, staying tight, staying patient, and waiting for the Fed. Okay, I was still here in the morning. I was still trading in the morning, but my main goal today was to trade the Fed announcement. This is the first time in 11 years that we were expected to get a rate cut. And we got a rate cut. A quarter basis point cut. And then Fed Chairman Powell gave his little post announcement speech at 2:30. And that's when all hell broke loose. And I'm going to explain to you guys why. Okay, because the market was expecting a quarter point cut. That's not why the market sold off. Okay, but there are certain clues that I used with the action that I saw after the rate cut announcement that really allowed me to make a judgment call on which way I thought the market was going to move once Fed Chairman Powell started speaking. And I'm going to talk to you guys about that. Okay. Before I get into this SPY trade, I made one other trade in the morning in a small cap DMPI. Took a small loss on the trade. Really, going into the day today, I was talking to all of our members in chat, pre-market. I'm like, guys, do not expect a lot of action in the morning. Do not expect a big directional move in the market. Everyone's going to wait until the Fed announcement. No one's going to be willing to take a big directional bet one way or the other before the Fed. So keep things tight. My plan today was to make sure I had, a loaded gun. I had my full arsenal. I had all my ammo going into the Fed announcement because I wanted to trade that move. Okay, that was what I wanted to focus on today. So I didn't want to do too much in the morning, possibly take a loss, put myself in a hole, and then I got to climb my way out of it. I kind of wanted to be in a nice, clean, level-headed position going into that Fed announcement because that was the trade I wanted to focus on today. And we did. We were able to nail a really nice one. Let me talk to you about the DMPI trade first. This was the first trade of the day, and it was for a loss, actually. So one of our members in chat actually called out DMPI right here. Okay, that first move, a member in chat was like, "Guys, I like DMPI. This thing has potential." Then I pulled it up. I looked at it. We started talking about it. That's the beauty of being part of a trading group, in a community, is that you guys get to bounce ideas off of one each other and analyze setups together. So we pulled it up. We looked at the daily on DMPI. We looked like, this thing does have potential, but for me, it wasn't enough volume right in here. It wasn't enough volume for me to take a position. I said, you know what? It looks good, but I'm going to wait a little bit longer. I'm going to wait to see if I get consistent volume so I can get a nice position size and not be worried about exiting that position should I have to. So sure enough, the stock just takes off and it starts to get the volume, that consistent volume that would make me feel better about the trade, and I draw my Fibonacci retracement levels. I wait for the stock to finally put in a high. There it is, and I jumped in, guys, right on a pullback here into the trade line and VWAP because we were getting a trade line VWAP crossover at that moment. So I jumped in right there on that tail at $2.34. Take to my trade announcements. Here it is, long at $2.34. We had the 38 Fibonacci level right underneath me, and I was looking for a trade line VWAP crossover to push the stock back up to the high of the day. First profit target was right in front of the high. I had an offer sitting out here at $2.52. I got filled at $2.52 for 25% of my position, and then it rolled back over. We didn't break out, and I got flat at $2.25. So right there is where I got flat. So there's the entry. There's 25% of my position. There's 75% of my position. Okay, but really just taking a very small loss on this trade because I was able to get some profits off on that first move, and I was able to stick to my stop losses and keep it nice and tight because I wanted to make sure I was ready to go for that Fed announcement, and I didn't do anything for the whole rest of the day. I just sat there and I just waited. Now here we are. Let's pan this over. We get to the Fed announcement. Okay, here we are, Fed announcement. Now, the market is expecting a quarter point cut. Okay, that is what is expected. So what I was thinking was, if we got no cut at all, the market sells off. If we get a half point cut, meaning a 50 basis point cut, I think the market rallies. That's what I thought. And then I thought if we get a quarter point cut, it's what the market expects. I thought we would trade slightly higher, but not like a big decisive move. I thought we'd trade slightly higher if we got that quarter point cut. So the announcement comes out, quarter point cut. Let me try to zoom this in. Here we go. So announcement comes out, quarter point cut. Bang. We actually sell off. So the initial move on the quarter point cut was a sell-off. Okay? And then what I start to notice now as I zoom this in is then we bounce back, and you can see we're having trouble. So we can't get back above the area that we were trading before the Fed announcement. We got what the market expected, but we're still trading lower. I read that as the market is fragile, okay, because it got what it wanted, but still traded lower. Now I'm saying to myself, okay, Fed Chairman Powell is due to speak at 2:30. The Fed announcement came out at 2 o'clock. Right now, I think the market's fragile because we're trading lower, and it's what the market wanted. Fed Chairman Powell has a very poor history of speaking on whether he's being interviewed, whether it's at a conference, or whether it is a post-Fed meeting conference, press conference. Okay, he has made multiple mistakes with his rhetoric and the tone and the vocabulary that he uses that sends the wrong signal to the market that he has had to walk back several times. This goes all the way back to October of last year when he first said, we are far from neutral. Okay, with interest rates. When they were talking about raising interest rates, he said, we're far from neutral. When in fact, they weren't too far off from neutral. That spooked the market. That's what started the sell-off in Q4 of last year. Okay, then he had to walk that back. There's been multiple times between then and now where the same has held true. So coming into this, I'm saying, okay, the market is fragile right now. Powell's about to speak. If the quarter point cut was not enough to rally the market, then what is? Forget about a U.S.-China trade deal. That's not going to happen for a long time. Okay, China has no incentive on cutting a deal with the U.S. until we're closer to the 2020 election, because if they think that Donald Trump is going to lose in 2020, they're going to hold off. They're going to wait until after the election, and they're going to cut a deal with whichever Democratic candidate wins because they feel they'd have a better chance negotiating a favorable deal for China if there's a Democratic president and not Donald Trump. So China's going to wait as long as they can. Donald Trump doesn't want to do a deal right now, right this second. You've heard him say it many times. Oh, China wants to do a deal, but I don't know. It's on me. It's on me. They want to do a deal. It's on me. Okay, it's really not. China doesn't want to do a deal right this second because of what I just talked about. But Trump doesn't want to do a deal right this second either because he wants to do a deal going into the 2020 election so he can ride the coattails of that victory of the U.S.-China trade deal. If you do it now, you're still over a year away, okay, well over a year away from the election. People will forget about it. So he's going to want to do a deal right when it's fresh. China's going to want to do a deal when they have a better feel for who's going to win. So it behooves both parties to draw this out. So where's the catalyst then? We got a quarter point cut. Where's the catalyst to push this market higher? Now I'm saying to myself, Powell has a history of screwing up the press conference. And not that he's doing anything wrong. It's just that the market doesn't like what he says. He's not saying anything wrong. He's not making mistakes when he says things. I'm just talking as a trader. Okay, he's said things that the market has not liked, which has caused a sell-off. Now, I already know the market's fragile because we're trading lower after the market got what it wanted, quarter point cut. So I'm saying the chances of Powell spooking the market with his speech are so much greater than him rallying the market with his speech. What could he possibly say that's going to rally the market? Okay, so that is why I went in and I took a put option position right here on the SPY. I'll take you to my trade announcements. Here we are. I bought the 300 strike, today's expiration put option at 47 cents a contract at 2:20 in the afternoon. So 10 minutes before he starts speaking. Now as I pan this over, you start to see a technical pattern comes into play, a nice little wedge pattern. He starts speaking right here at 2:30. He starts speaking, and then someone asks him a question, and all hell breaks loose. The reason why the market sold off is not because of the quarter point cut. The reason why the market sold off is because he had said that this is not the beginning of a lengthy cut cycle. Okay, that the Fed is not in a cutting cycle, meaning they do not plan to cut rates further. That spooked the market. It made the market feel like this is a one and done, that we are not going to get any more rate cuts to try to push to keep the expansion going. We're not going to get any more rate cuts. If we need another rate cut, doesn't matter. It's not coming. That's how the market interpreted what he said. That is why you got this huge sell-off. And this sell-off was massive. Look at this sell-off, guys. This is no bounce attempt whatsoever. We just absolutely collapsed. Now, when I'm listening to his speech and I'm saying the market's tanking, and I'm like, what? I didn't hear him say anything that was that bad. Like when he said it and I'm listening, I didn't take that as all the world. Like I didn't read that as such a negative thing. But right before 3 o'clock, he starts to walk back that statement and says, well, we're not on a path of cutting, but we're also not on a path to not cut anymore. So basically, he would not commit to one way or the other. He's not committing to saying, yes, we're going to cut more, or no, we're not going to cut anymore. He didn't commit to either way. And once he said that and he clarified his statement and what he really meant, the market started to bounce back. Right before 3 o'clock is when he said that, when he started to walk back the statement, and then the market bounced back. Okay, the market starts to bounce back. But let's go back. Okay, here's my entry on those puts. We break down out of this little wedge pattern, and I start taking my profits off the table, guys. And this is what the trades looked like. Okay, so here's first take profit, second take profit, third take profit. And the reason why I got flat there in front of two, let me take you to my trade announcements. So here you guys can see I took some profit at 56 cents. The bulk of my position off at 72 cents. And my final take profit off at $1.03. That is a 119% gain on that final take profit. And I still left a ton on the table, guys. These contracts went up to like $4.50. Okay, you're talking about a 900% gain in a matter of 20 minutes. Okay, that's the power of options. So I pulled out 119% of my final take profit, and I still left hundreds of percent on the table. Okay, so I was pretty bummed about that, but I just didn't expect it. 229 was a support level that I was looking at. Let me draw a line here at 299, and as I pan this out, I'll go to a 15-minute chart, and as I zoom this out, I'll show you guys why. Here's this support at 299. Okay, here's your level at 299. That was my target on the trade. I was not expecting this all hell break loose panic sell-off that took us all the way down to 290. Let's see, 295. Look at this. This sell-off is huge. All the way down to 295. Was not expecting that at all, so I left a ton on the table. Okay, left a ton on the table, but still, it's crazy. You look at this chart, and I'm like, man, Mike, you caught a tiny piece of this trade. Still 100%. That's how big this move actually was, and I just wasn't expecting it. So I'm still, listen, I'll never be upset at a triple-digit gain. I can't be a greedy pig. Okay, I'll never be upset about it, but I left a ton on the table, so it sucked to watch the contracts go all the way up to like 450, 470 when I bought them at 47 cents. But I'm still happy, selling the bulk at 72 cents and my final take profit at $1.03. I just wasn't expecting that, but was still a really nice trade. It was a really nice win. I was happy that I was able to capitalize on this trade. I waited specifically for this trade. I waited specifically for the Fed announcement trade. Used some good fundamental reasoning, behind, why I thought it was a better play to buy put options than call options after I realized the market was fragile and the chances of Powell spooking the market were much higher than him rallying the market. And sure enough, he did not fail to come through for me. He spooked the market like crazy, and you got that huge sell-off. The market started to bounce back, but now we're kind of in some technical trouble. Okay, the market is technically starting to break down a little bit as far as your technical analysis. And what I want to do for you guys, let's draw that line back at 299. Remember that support level we just talked about? Here was that support level. Remember that support that this is old. These arrows are old. But you guys remember this support level that we just talked about? Okay? Remember that? Now let's go back into a 3-minute and see what happened here. Look at where we found resistance. Dun, dun, dun. 299. Okay? So that 299 level is significant. It just proved to be resistance when we got that bounce back. And you can see after that bounce back, the market has sold off pretty aggressively away from 299 all the way down to 296 now after market. So 3 full points. So that's why I'm saying I think that technically, okay, as far as technicals and charting and everything, I think that the market is kind of broken a little bit, okay, with this candle here. And I think we do have a little more room to the downside here over the next coming days. So we will see. I will see. We'll see if we do have some more downside. I think we do, because I just, I don't know how many more, what other catalyst there is to continue to push this market to all-time highs. Earnings have been decent. Earnings have been decent. Not blow your hair back, but not terrible. Earnings have been decent, but I don't think it's enough to keep the market pushing to all-time highs. And like I said, with no U.S.-China trade deal, what's the catalyst to push us to all-time highs now? I'm not really sure. So that's why I think we're going to get a little bit more of a pullback, a little bit more profit-taking, was when people start to realize that a U.S.-China trade deal is still, in fact, very far away. Okay? So, good stuff, guys. I'm happy, very happy with myself today. I followed my game plan to a T coming into the day. I stayed tight and conservative in the morning, and then I waited and I attacked the Fed trade, and we nailed it. 119% gain on those put options was a thing of beauty. I'll see you guys in chat tomorrow.